Welcome to Lunch Money. Coming up, is a 99% mortgage really what struggling first-time buyers need? Why the US stock market has hit a record high? And stick around to find out how much your energy bills are forecast to fall by. Hello, I'm Simon Lambert. Joining me on today's Lunch Money is This Is Money's Helen and Richard Hunter from the show sponsor Interactive Investor. Now there's a new plan in town for tinkering with Britain's dysfunctional housing market, 1% mortgages. We'll discuss how this could work and whether it would help first-time buyers shortly, but first, Helen, why? What is the problem that this is trying to solve?
So it's important to say first that this isn't confirmed. This is something that's been rumoured to be potentially happening in the budget on March the 6th. The reason for it, it's quite a simple reason. Young people and increasingly people that aren't so young are struggling to get a foot on the housing ladder. And one of the big reasons for that is because they're finding it really difficult to save up a high enough deposit, especially if they're renting. We've seen rents go up really sort of strongly in the last few years especially, and if you're paying those high rents it becomes more and more difficult to save up enough to put down a deposit on a house. So at the moment, if someone was buying say a £300,000 home and they had to put down a 5% deposit, which is generally the minimum, that's £15,000. So especially if you're a single person, you're a person who's not on a particularly high salary, that can be a really difficult amount to be able to stump up.
And many of these people would find that perhaps their mortgage payments would be roughly similar with the rent that they're paying anyway. That might have changed slightly due to the rise in mortgage rates, but that's often the case. So why is it that banks and building societies don't already offer these if they're such a great idea? Yeah,
you're right that a lot of people who are renting could pay mortgage payments monthly, but it's this large amount that they need to put down that is a stumbling block for many. The reason banks aren't keen to offer them, and some banks do offer them, there are a few schemes that will allow people to borrow more than 95%, but they're few and far between, and that's because it's very risky for banks. If you're putting down just say 1% for a mortgage, the bank is putting down an awful lot and the borrower is putting down almost nothing. There's also the risk of negative equity. So that's when, say, if you were to buy a house and then the price of that house fell, the value of the house would become less than the mortgage that you had secured on it. That's a problem for banks because if you stop paying your mortgage and they had to repossess it, they might not make back the money that they put in.
And in fact, I saw an interesting statistic on that yesterday. There was some figures out from Hamptons saying that the average home seller who'd bought in the last 20 years sold and made £100,000 profit on their property. But it said that 93% of sellers made a profit, but that leaves 7% who don't. So there is a genuine risk that your house might fall in value, isn't there? What can first-time buyers who are considering doing something like this do to protect themselves?
Yeah, there's a few things they can do. I would say, first of all, be careful about the kind of property that you buy. Make sure, the key thing to make sure is that it's something that will resell easily when you need to resell it. It's a property that someone else would feasibly want to buy. So new builds, for example, seem to sort of fall in value in the first few years after their first bought. So if you're buying a new build, perhaps make sure it's somewhere that you're happy to stay for a few years rather than selling a couple of years down the line. And with the mortgage repayments as well, it's worth thinking about if you do take a very highly leveraged mortgage, in a few years down the line, would you perhaps be able to overpay your mortgage, which means that you could sort of build up more equity in the property quicker, which gives you that shield against potentially falling into negative equity.
Thank you very much, Helen. Investors have shrugged off worries over the global economy and an early New Year blip for shares and have been buying again. The leading US stock market index, the S&P 500, has hit a record high 2 days in a row. Richard, what's happening here? Why has the stock market climbed again?
Yeah, there's been something of a return to the animal spirits we were seeing in December. As you say, we had a slightly unconvincing start to the year, but some updates from semiconductor companies, for example, have basically reignited the tech fervour. That's not to say that it's just technology shares which have gone on a run alongside the S&P 500. the Dow Jones, which is more of an indicator of the inverted commas old economy, is also at a record high. In fact, ironically, the one that isn't at a record high is the Nasdaq, which is about 4% away. So it's within distance, but not quite there yet. So yes, it's been a fairly broad turnaround in sentiment. We're also, of course, in the middle of the annual earnings season, and there have been a couple of pleasant surprises there as well. But of course, when we're at record high levels, such as we are now, that does start to beg the question of valuations and whether we might see something of a pullback. But so far, so good.
So it's not just down to the Magnificent Seven again.
Yes, that's right. It's been fairly broad brush. As I say, within the Dow Jones 30, for example, the oldest index, there's very little exposure to tech in there. And that index is also hitting a current record high. So it's been a fairly broad brush markup of shares, although arguably, again, it was the tech shares which prompted the turnaround in sentiment.
Now, a bit closer to home, AB Foods, the parent group of high street clothing star Primark, had some results today. What did it say? Has it had a good Christmas?
Yes, it certainly has. It was an update on the latest quarter. It said that they got off to a fairly slow start, given some unseasonably warm weather, which seems difficult to remember now. But that then translated into a very strong Christmas period. Not only its Christmas ranges, but more generally, women's wear and men's wear sold well. And of course, Primark is also now on something of an expansion trail. It's opened stores during this period alone in the likes of France and Spain, and another 3 stores in the States. So bearing in mind that Primark represents pretty much half of overall AB Foods revenues, the fact that it's really chiming with an increasingly cost-conscious consumer who is continuing to visit its stores.
Thank you, Richard. And finally, there has been a little bit of good news for our bills. Analysts have forecast the energy price cap will drop in April. Helen, what's the magic number and how much will this save us?
Yeah, so this is some good news. This is from Cornwall Insight, which is an energy industry forecaster. Historically, they've been pretty accurate at predicting where the price cap is going to go. So they've said that from April the 1st, the average household, their annual bill is going to be £1,620. So that's a 16% fall from where it is at the moment. After that, on the 1st of July, it's forecast to fall even further down to £1,497. So that's, some good news for households struggling with energy bills, but obviously still much higher than we were used to a couple of years ago.
That was what I was going to ask you. How does this compare to before the energy price spike?
Yeah, so back, if we look towards the end of 2021, when the energy crisis first kicked off, the Ofgem price cap in October 2021 was £1,138 a year. So that's already quite a bit less. But what you have to think of is at that time, a lot of people weren't paying the price cap rate. They were on these cheaper fixed deals, which, there still aren't many of those around. So around that time, what most people would actually have been paying was about £600 a year. So we are still, unfortunately, much higher. And that's on top of other kind of cost of living pressures. But things are moving in the right direction.
Well, that's good news, but it's a while before we get there, so people are still going to have bigger bills over this winter. Yeah. Thank you, Helen. That's all for today's Lunch Money. You can catch all the previous shows at thisismoney.co.uk/lunchmoney or search for This Is Money on YouTube. And if you're watching there, please consider doing us a small favour and hit the like button and subscribe. Join us for the next show on Thursday. Goodbye.